Hi, welcome to the Market Alert for Thursday, the 16th of January 2020. So yesterday it's sell the news, stocks, dollar and bonds yield slide after signing trade deal. This is an interesting one, isn't it? Because if the trade deal has been signed, then we can expect some sort of carnage going forwards. The market managed to take off to begin with in the pre-market session from this low to this high. It took us to 76% here. The market then just blasted, which you'd expect with signing a trade deal, and moved higher. We had some resistance here and some profit taking, and then the market drove through, which you can see there with the professional buying, and then this is followed by another one. And then all the way up to the high of the previous day, the market finds a bit of resistance and then moves higher once more through another 50 points back to the resistance, and then manages just to trade through and then come back. And a question I've been asked is about marking up the 76% retracements. Well, once you've got a high that's left behind here, I will mark this up and the low that's left behind, because the next bar moves to the upside and it's sitting at the 20 bar moving average. I will click here and this will give you the 76% area. You can see the market's banging its head against this area, and then prices retrace. But what's interesting is where they retrace to. So from the low that was created here to the high is 76%. The market then starts to move higher once more, and we've got a high that's left behind here to this low, and we see 76%. So if you look at a market that's trading sideways, you will find that it's oscillating between these 2 points most of the time, and then eventually, as prices from this low to this high, you'll see they drive through the 76%, find support, and again start to trade sideways from this low to this high is 76%. And if I was to do the same from there to there, it'll be more or less in the same area as well. So then prices start to make their way back to the upside. I look to the left, I can see that this is more of a double top than a 76% retracement. I'll just show you this so you'll see it's gone through the 76% there. So I will remove this one, and then I'll just work my way back through the highs. So from this high to this low, it's gone through this one. And then as the market stays there, I'll come back and I'll find the 76%. And not only is it a 76% retracement, I'll just move the chart over there, it's also a psychological level as well, 29,100. The market then comes back through. I've got potential weakness, and the market then comes all the way back down to and sits on, yes, the 200 bar moving average, where we see the buying coming into the market following the down move. This is profit taking from those that were short. They tried to buy it back as it came down and test it, but the market failed. The selling then overtook the buying, and we see prices putting the brakes on at the 200 MA. The market also makes lower highs as it comes down as well, and then rallies just before the close, and then all the way back to the resistance that we had at 29,100 there. And then prices have been in a sideways range, and again they will have oscillated between, as you can see here, you've got a double bottom along the bottom here. You've got a channel along the bottom, now triple bottom there, and also there, but this one will be a 76% retracement, and eventually the market comes back and puts another double top. But inside of this oscillation, you will get the 76% turning up. But overnight, the market still above the 200 and the DP at the moment, even though looking as if it was going to run out of steam, as per the article headline there on Zero Hedge saying sell the rumour. And I suspect over the next few days that could be entirely the case. Let me just put in the new all-time high here using the Zero extension. So we've got the market trading at a high now, 29,130. We know we want the market up at the 30,000 level, if not higher. So watch this space. And the implied volatility actually from yesterday is also interesting. Down back below the 20 bar moving average at the moment. We can see that we've got a downtrend in this also. You can see it there, and the same in the coloured one as well. You can see it there, back to green now in the implied. So there's seems to be no risk, even with the shakeout that we saw yesterday before the close when the market came back. You can see this here. It's not a 76% retracement from the high to the low. I'll just show you this. So we've got the low here up to the high. Let's drag that across and you can see it's not quite got there. I was looking at the time, but the market found that support at the 200 moving average. 200 moving average, 76% retracement. Pivot lines and psychological lines are invaluable tools. Again, you can see how the market sits here. Psychological line, psychological line, psychological line, through the psychological line, and then back through. And also, they're brilliant for profit targets and for areas to switch sides as well. And news-wise, what have we got today? It's Lagarde Day, isn't it? If I recall, we've got Bank of England Credit Conditions Survey. That's not going to make any difference. ECB policy meeting accounts. Philly Fed and retail sales for the US at 1:30. And Lagarde's out at 6 p.m. This evening. So that's the news. See what she's got to say at 6 p.m. She hasn't made much of an impact at the moment, as I thought she may do, but let's see. Plenty of time yet. Okay, that will do it for this one. Bitcoin's not doing a lot, so I'm waiting until it actually picks up some sort of speed and momentum, and the volatility increases before returning to there, because all of the action at the moment is in the Dow, as you can see here. Yesterday's initial move was just under 250 points. So we're guaranteed at least 150 points per day at the moment in the Dow. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.